Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule of events for Friday, March 11th. Well, the first indicator of the day is the UK trade balance for January at 9:30 GMT. The market looks for a continued widening in the country's trade deficit. Normally, this deficit is easily covered by capital inflows, but ahead of the Brexit referendum on the 23rd of June, this may be difficult. For example, foreigners sold an unusually large net £6.2 billion worth of gilts in January, one of the largest net sale figures ever. Also, remember that Britain's the world's fourth largest recipient of forward inward investment. But that investment is likely to slow down ahead of the vote and could change dramatically if the country votes to leave the EU. So this indicator is potentially negative for the pound, in my view. Then at 13:30 GMT, Canada announces its employment data for February. Wednesday's statement by the Bank of Canada noted that, quote, national employment has held up despite job losses in resource-intensive regions, unquote. Now, today's data is expected to confirm this encouraging picture, with the number of employed people expected to rise and the unemployment rate remaining unchanged, even as the participation rate rises. That should add to the Bank of Canada's conviction that they did the right thing in holding rates steady and could add to the Canadian dollar's recent gains. On Saturday, China announces its industrial production, fixed asset investment, and retail sales for February. The data are expected to confirm either the continued restructuring or the continued slowdown in the Chinese economy, depending on whether you're a bull or a bear on China. I expect that the figures could be taken negatively as an indication of slowdown and might result in the Australian dollar getting knocked lower when trading starts up on Monday. Finally, on Sunday, there are German parliamentary elections in 3 regions. This election is being taken as a referendum on Chancellor Merkel's refugee policy. A recent survey showed that the anti-refugee Alternative for Germany party, which was considered a fringe party only a few months ago, now has double-digit backing in all 3 states, while Merkel's Christian Democratic Union is predicted to see a notable decline in support. The question for us, though, is whether such a result would affect the euro. As they say in politics, you can't beat somebody with nobody. So far, there's no plausible replacement for Merkel on the horizon, nor is there a concerted effort to unseat her in her own party. So, with Merkel still looking solid, I don't think even a poor showing for the CDU would affect sentiment towards the euro. Not yet, at least. Nonetheless, the rise of these far-right anti-immigrant parties globally, from Slovakia to the US, is a matter of more than passing interest for both political and economic reasons. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.